General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Did the Saturday work? So days. Saturday. Which models hit, which missed? Monday was a holiday. That's usually bullish. That came through. Tuesday we got London low of the day. We just not seeing no real retracements. Identity progress for the week. Discipline has been improving. I've been tightening up my shot selection for better analysis. I'm backing off resulting and focusing on looking at long-term picture, not letting one day or one trade get me out my body. No case studies. Experience earned this week. I learned if you rationalize a loss with ego, you don't learn from it. You have to look at that trade from different angles and break it down and see what in the process was wrong and not base it on the result of that trade. Next week, improvement focus, 1% a day, and really focus on each step. It's slow, step by step of each part of my process is helping me refine my process so I can scale it. Look at the power of 3, one day holiday. Us not taking Tuesday on NASDAQ was weird, but it confirmed the S&T because we got it here. This is a profile only on SPY because we actually got that low. So here, Monday, Tuesday, Wednesday range, sweep that whole range. We didn't get that on NASDAQ. The S&T could have helped though. It's just at the end of the week, Thursday, it wasn't no continuation to be like, all right, let's buy this day. NVIDIA went down, so its power of 3 is a little bit different. I'm thinking this is what's stopping the market from just rallying super fast because it's going to be hard to buy this when NVIDIA is going down. So we're getting a lot of chop. It went up and then sold off at the end of the day. Notes and thoughts, keep going. Then I did the week review, I believe. Yeah, week review, 5 days, 2-day engage, 1.09 profit factor. Best framework is going with the trend and looking for buys. Yep. did I do this week? Look for sales and follow the delivery. Did I follow my plan? Yep, I look for the sales. Did I deviate? No. What will I change? Nothing. What worked well and needs to be repeated? Setups, not feelings. If my edge shows, I'll advertise. Okay, boom, boom, boom. Then I did the month review because we're gonna get into a new month. So I gotta do that new month open tomorrow. Month review. This month I was off because I was looking for selling made go away, and we just bought. So my framework was off every week because I was looking for the sale. But I did learn about FEMO, which is not FOMO, fabulous earning momentum. So all that earnings is super good. All the companies started buying AI, memory, data centers. That momentum pushed everything higher. So the conservative funds, they gotta deploy their capital so they don't lose their clients to other fund managers. It's competition. You can't just sit there and be like, I'm waiting for a good time to buy if people gave you their money to invest. So these earnings is pushing money back in the market. Hits, no hits this month. Yeah, I held too long. Misses, missed that. The hits were concentrated the last 2 weeks of the month, so I figured, all right, we're not doing a sale no more, especially after option expiry week 4, week 5 is never good. Adjustments to the rules, develop a way not to get attached to bias. It'll be personal. I may have to plan a buy setup every day and not plan to sell until the daily charts confirms the bearish delivery. So then I did the mental and execution for the month. What I did matched my standards where I slipped. I started only trading setups and not ideas. Yeah, that helped. One behavior to continue and one to stop. Keep the setup style trading and stop thinking about the money. True evidence. Entry time and risk placement, high probability. I want to up my risk, but I got to build a buffer. Yeah, got to do that. More precision upgrade for the next month. Less green and red trades, better moving stops. Yeah, I need to do that on my metrics. Looking at the trade seller. So that's month review, week review, month of May done. Tomorrow starts. Open a new month, new monthly targets, and hopefully some better price action. All right, peace.